What's up, guys? Stas here. So the stock market futures are not looking too great right now, pretty much giving back all of their gains from Friday, with the E-mini S&P 500 futures being down 1.4%, down about 40 points. The Dow Jones futures down 375 points, down about 1.5%, with the NASDAQ futures just over 100 points in the red, down about 1.1%. And in this video, we're going to talk more about the markets, breaking down some technicals, and I want to go over what are my plans heading into this week in the stock market. Last week, it was a pretty crazy week, right? Volatile. We saw the Dow Jones down almost 2,000 points, and quite honestly, I expect this week to be pretty volatile as well. So I want to go over my thoughts, my plans, and 7 stocks in particular that I'm actually looking to trade, that I'm looking to buy heading into this week. So if you guys find value in this video, as always, hit that like button for me, consider subscribing to the channel, and check out the free links down below in the description box if you want to be further connected with the Strive Smart community via the Discord chat, the Facebook group, and if you want 2 free stocks from Webull valued up to $1,400 if you deposit $100, that's all linked down below in the description box. So first and foremost, let's get an idea of what happened in the stock market last week. And to do that, I'm simply going to go here. Actually, I was going to go to the SPX, but let's go to SPY, which is an ETF that tracks the S&P 500. And we can simply go here to the 5-day 5-minute or the 5-day 15-minute to get an idea of what happened in the past 5 days of trading, which again was last week. So we can see here clearly SPY was treading water at about 320 on the 9th of June. On the 10th of June, right around 320, right? We went down to about 318. And then that is when the massive drop came. If you guys recall, last week Jerome Powell spoke, I believe it was on Wednesday, and the sentiment, the vibe that many people got from the way his outlook is on the economy, which is pretty bad, right? The vibe was scary. People panicked, right? And the markets completely dropped off a cliff. That was a big reason as to why the markets started to drop like crazy this day. The SPY went from, again, 320 the previous day, and 24 hours later, it was at 300 points. That means, guys, the S&P fell about 6%. So this is giving us some vibes, some memories from back in, March, which was the last time the markets were seeing these types of drops. We were falling 5, 6%, 7%, 10%. It was insane, right? And then the following day, which was Friday, this day right here, the last day the market was open, we actually ran up a bit, but you guys can clearly see we ended up falling into a downswing, but ultimately still closing up $3.60 on the SPY, being up about 1.2%. But again, with the futures now, if we go to the S&P 500 futures, they're actually giving back all of those gains and some. We're down 1.5%, and a very key level here. And guys, watch this level heading into tomorrow, because mind you, the futures, they're actually trading throughout the night. So when you wake up in the morning, take a look and see what the futures are doing heading into the market open, and that'll give you kind of an idea, okay, where's the market going to push in the morning and for the beginning of the day, right? If the futures are red, likely, the markets are going to be red a bit, but there's a couple of scenarios that could come out of that, and that's what we're going to talk about right now. So watch 29.50 to about 29.70. That's kind of what I'm watching heading into tomorrow. And the first scenario that can happen, guys, and we are potentially seeing it happening right now slowly, is the markets fill this gap completely. Fill the gap completely from what just opened up, right? And you can see it right here. The E-mini S&P futures went from 30.20 down to about 29.60. So one possible scenario for tomorrow is, okay, we already saw a big drop here. Maybe we see a bit of relief. The bulls bring us back up to 3,000. We fill that gap, pretty much the entire gap that was just open. That's one thing that can happen here in the S&P 500, right? And we've seen it before. We saw a drastic drop followed by a little relief rally. Drastic drop followed by a relief rally. And now we're seeing, again, another drastic drop on this gap down, which could very well be followed by a little relief rally, especially if we hold 29.60 to about 29.70, which is a support, as you guys can see here on the chart, and it's exactly where the ES futures are holding right now. And scenario number 2 could be, okay, this does not just bounce back up. This is just the beginning of tomorrow's sell-off and the sell-off that we see this upcoming week, right? And again, it goes back to that key level at about 29.50 to 29.70. If we wake up tomorrow and the futures are trading below that, which would be very bad for the bulls, that could mean there's going to be more selling to come. And if we go to this hourly chart, you guys can see the next range that I'm looking at on the S&P futures, if we break 29.50, 29.70, is going to be around 29.20, right? That could be the next spot where we do get to before another relief rally. That's if scenario 2 plays out, which means we break 29.60 to the downside. So watch those levels on the futures, guys. And quite honestly, with what I'm seeing now, I think there's more downside coming, right? This is not too good of a sign, this big gap down. But again, don't be scared when the markets go down. This is actually the opportunity that I've been waiting for over the past couple of weeks, buying into the weakness. That's kind of what I'm looking to do here. But like I said last week, I'm not jumping the gun, because the last position that I want to be in is on the first drop in the markets. I unload my whole cash position, so when it drops again, I don't have cash to put more in. That's the last position that I want to be in. And I know many beginners out there on this previous drop, they added their whole cash position on the first drop, and they missed out on the bigger drop where they could have bought stocks at an even lower price. So I'm being very patient heading into this week, and of course I'm watching those levels that I've been talking about in these videos. And when it comes to the NASDAQ, guys, very quickly, on the 4-hour chart, you guys can see we're actually maintaining the 180 SMA here on the 4-hour chart, which is a pretty good sign for the uptrend continuing, although we haven't really consolidated and broken out quite yet, which is obvious based on this 5-day, 5-minute chart. You guys can see we're still in the downtrend. So overall, I'm going to wait and see, okay, if we break the downtrend on the 5-day, 5-minute, that means it's going to be holding on the 4-hour chart indefinitely, which means, okay, the uptrend is going to most likely continue at that point, which in turn we can jump into some bullish ETFs such as, TQQQ, which goes up whenever the NASDAQ's going up, and so forth, right? There's many other ones like that out there. And you guys can already see, right, the gap fill scenario is not saying it's going to happen 100%, but it's already happening here in the NASDAQ, right? Notice how we dropped. We opened that entire gap from 96.30 down to about 9,500, held the support there, and now we're slowly filling the gap back up to about 96.30. So don't be surprised, guys, if the markets are green tomorrow. I know it's crazy, but do not be surprised if we do end up filling that gap entirely and, end up going green. That would be absolutely incredible, right? It would be insane. And the Dow Jones here, you guys can see very similar. We're holding 24.9. We're starting to gap up to about 25.4. And if we pull back a bit to the 4-hour chart, at this point, guys, we're at a very critical level of old resistance as a new support at about 24,600. So watch this level. It is imperative that the Dow futures hold this level here as a support in terms of the bulls, right? Because, if the bulls lose here, we might be going all the way back down, no joke, to 23,500, which is the next major gap that I'm seeing here on the chart. So overall, guys, those are some technicals here on the markets. Kind of some thoughts on what happened last week, and in general, what I'm doing, like I said, I'm being very patient. I have a lot of cash. I'm not looking to unload the cash all on the first drop, but I am just buying here, buying there, being very safe with my buys, and mostly being patient, sitting on cash, waiting to see what the markets do. And as always, I'd love to know down below in the comments, what are your thoughts? I love talking to you guys as always, and you guys know I reply to 90 to 95% of my comments, so don't feel shy to drop a comment. Now, let's get into the top 7 stocks, and I'll throw some bonus ones at the end here that I am looking to buy heading into this week. The first one here is Nike, ticker symbol NKE, and this is one that I've been waiting for. If you guys actually have been following the channel for about a month and a half at this point, Nike's actually a stock that we called out all the way back here in the middle towards the end of April. We were talking about how Nike was trading at about $90-91, and if it were to break that, it's going to fill up to 95. It did exactly that, broke 91, filled to 95, and then it saw this ridiculous rally, which in my opinion, it got way overbought. Like many stocks out there during the past 2-3 weeks, they've gotten so frothy, they've gotten so just into like a speculator's dream. You know, it's just been ridiculous, these valuations, right? And I've been waiting for the pull down on Nike ever since it got to that frothy spot at about $104, $105, and now we're finally getting it, right? We've pulled down to about $95, which is around, believe it or not, guys, a 10% pull down. You know, that's a pretty big pull down when it comes to Nike stock. And notice how when it comes to the charts, we're right above the 180 SMA here. That's a good sign. That should act as a support if the markets end up balancing out here, you know, over the next couple of days. And we're also at a point where in the past, 95 was a resistance, right? And we all know when a resistance breaks, once a stock breaks a resistance, it becomes a new support. So that's kind of where we are right now with Nike. And for me to enter the stock, guys, if we get a bit more into the nitty gritty here on the smaller time frames, I want to see the stock fully break out, not into the hundreds. That would be kind of a missed opportunity if I got into the hundreds, but I want to see the stock break at least this moving average downtrend on the 5-day, 5-minute, and probably get into the 97, 97.50 territory. If we get there, that's where I would personally buy, right? And especially if we got out of the resistance here pre-market on Friday. So I'm gonna set an alert here, you know, on this stock. Let's put an alert. Mark is at or above $97.50. That is where, actually, let's do 97.25, so I get alerted a bit before, so then I can make my move and decide what I want to do. So that's Nike there, ticker symbol NKE. And another stock here, which is interesting, is BA, also known as Boeing. So this is one of those companies that is completely a wreck, in my opinion, right? The management is a wreck. You know, the business itself is seeing a lot of issues. Obviously, when you're looking at it from a long-term perspective, you know, they cut the dividend, which is not attractive whatsoever, which is why I sold out of the business in my long-term portfolios, completely. But looking at it from a trading perspective, you know, when this stock drops, and when the markets drop in general, what is the market really addicted to at this point? I know you guys have heard this. The market is addicted to stimulus, right? It's addicted to the money printer. It's addicted to the Fed doing what the Fed does best, doing what Jerome Powell does best, and that is printing money. And you guys remember, President Donald Trump said there's no way Boeing is going to go bankrupt. There's absolutely no way, because they employ so many people. They do so much research, development, defense, everything. That company is massive. There's no way it's going to go out of business. So this means that they're going to push so much stimulus into Boeing that the stock, it's not going to go bust, right? So every pull down that I'm looking at here, I'm looking at it as a potential swing trade, because again, this stock's going to get inflated. It's going to get pumped due to the fact that they are not going bankrupt. There's no way that the stock will go bankrupt. Or the company will go bankrupt, right? And when a company goes bankrupt, usually common stockholders get completely wiped out, and that's a whole different story. But yeah, it kind of does tie into this a bit, because they are, quote-unquote, facing bankruptcy if it were a free market. But again, with the stimulus, this is looking like a potential entry point, right? From 240 down to 180 bucks. It opened up 25% potential for profit, guys. And notice how we're holding the high from back towards the end of March. Remember when Boeing rallied from 90 to 180? Notice how we're holding that level as a support. That's a very good sign here for the bulls. So for tomorrow, guys, I'm watching 180 like a hawk, 190. If it starts to break up there, I'm most likely going to take a position here on Boeing, ticker symbol BA. And another one here is SBUX, ticker symbol SBUX. They got some bad news. Like many restaurant stocks out there, they lost about, I don't know if they lost $3 billion or their quarterly earnings were $3 billion less from last year, but they took a massive hit when it comes to their business, right? And we can see that clearly in the stock here. The stock went from 84 down to about 72, but you can't deny the fact that we are starting to see a bit of a recovery here over the past day or two in trading. On Friday, the stock went from 73 all the way up to almost $77 per share. And going to this 20-day chart, you guys can see that we actually broke the EMA resistance on the hourly chart, and we're starting to rally back up. But notice how the 50 SMA is a resistance as well, which for me, guys, to enter into SBUX, which I took a loss on last week, I actually need to see a break out of 77. So we'll see if that ends up happening in this upcoming week. But overall, when I'm looking at the markets here, when I'm looking for a recovery play, SBUX is at the top of the list. But remember, the markets in general influence the individual stocks a lot of the time, right? Sure, there's uncorrelated stocks like Virgin Galactic, Tesla, NEO is another one. And by uncorrelated, I mean that they can be green even when the markets are red. But let's say tomorrow the markets are very red. It's likely that SBUX and many of these stocks we talk about in today's video are going to be red as well. It's just the truth, guys. So SBUX, I'm watching it, SBUX, with the next one being MasterCard, ticker symbol MA. MasterCard is one I swing traded, I believe, 2 weeks ago. Heading into last week, I made a pretty nice profit there. Thankfully sold out before the big drop. Now I'm actually looking to get back in. And again, same with SBUX. If we see a big red day tomorrow, Tuesday, it's likely MasterCard gets hit. But I'm okay with that because I have a target price right now at about 280 to about 285. This is where I'd heavily start accumulating MasterCard shares on this 180 SMA. Very simple. On this 4-hour chart, you guys can see it right here. Also, it is an old resistance as a new support. It would be right around $280. So for me, if I'm looking at companies, stocks that I'm looking to buy into weakness, MA is also on that list because let's say, again, we pick them up, the shares that is, at 285 from 315, where it literally just was a couple days ago. That's a drop of about 10%. So that's attractive in my eyes. And remember, I mentioned NEO. It's an uncorrelated stock. A lot of the time, it goes up whenever the markets are down. And sure, it does go down when the markets are down too, but it's one of those that it's a flyer. It can go either way, and you guys can see breaking above $6 on Friday, up 19 cents, up 3% on Friday. That's a very good sign for the bulls, right? The fact that we actually closed above $6. So for this week, guys, I actually think there's a lot of potential, honestly, for NEO to get back up to $7 and maybe even break $7. Notice how we saw an insane rally in the stock on the 9th of June. Following day, we went up on the 10th of June, up even more, but we failed right around $6.95. So I'm actually looking to see, what this one's doing pre-market. I'm thinking if we break 630, 640, that's going to be where the stock completely takes off. And we saw insane rallies again last week that were just incredible. So watch for the 630 break. I see NEO, no joke, going back up to $7. Remember, they got a bullish, call from Goldman Sachs. Goldman Sachs ended up upgrading the stock, right? And although we don't take analysts' expectations 100% as a fact, we take them with grains of salt. You have to realize, although you take it with a grain of salt, it still moves the stock regardless for a lot of the time. And yeah, it could continue having this effect, especially if other big banks, other analysts come out and say, yup, NEO's a buy, yup, we're putting a buy rating on NEO. That could end up pushing the stock up like crazy, and especially if institutions come in and they end up hitting their numbers, their pretty lofty guidance numbers that they set for quarter two, which I'll probably make a video going deeper into that as we get closer to their earnings. It'd be very interesting to see what they actually do, guys, and if they do grand slam hit their earnings, they hit them out the park, I can see this stock going back up to $10. I know I don't like giving predictions long term a lot on the channel, but I'm going to give one now. I can see NEO going up to $10 if they kick the booty earnings, or that sounded weird. Kick the earnings booty. Yeah, let's just keep it at that, guys. So the next stock, oh my goodness. The next stock, this is what happens when you have over 900 videos on YouTube, guys, or right around 900 videos on YouTube. The next stock is Facebook, ticker symbol FB. This one, I like how it held 225, heading into the weekend here. But I talked about on Friday how I honestly wouldn't be opposed to Facebook dropping even lower, right? And going to a target of around $215 to $220. And that's kind of where I'm looking at it at this point, right? And overall, guys, like I said with Starbucks, MasterCard, if the markets take a dump this week, Facebook's going to drop. It's a large cap company. I don't even know. Is it a $1 trillion company at this point? It's pretty dang close. It's going to get hit as well, and we might get that $210, $215, $220 price target. And another one here is an energy stock. It is BP, guys. BP, I don't really trade a lot of energy stocks, like ExxonMobil, Chevron. I don't really trade these too much, but there's a lot of potential in all of them at this point due to the dip being pretty immense. BP went from $30 roughly to about $24. That's a drop of 16%. So if it moves, or rather if it holds these moving averages here, this could be a play. And some bonus ones here we can talk about. Some other oil stocks. ExxonMobil, the chart is pretty much identical to BP. I'm watching this. I'm also watching Chevron. I forget the ticker symbol on that, but you guys know Chevron. And as always, I'm watching leveraged ETFs. I don't like pushing, not that I push these like, oh yeah, the leveraged ETFs companies pay me. They don't pay me a dime. But I don't like talking about these a lot because I realize beginners follow me, and these leveraged ETFs, they're very dangerous. I talk about how all the time, don't hold these overnight. The prospectus of these ETFs literally says, do not hold these overnight. They're only meant for day trading, but people continue holding them overnight. They bag hold them. They lose a lot of money. But the truth is, if you do this, you actually learn pretty valuable lessons when it comes to trading. And if you take loss after loss, taking these lessons, ultimately it's going to make you a better trader. But honestly, why go through those mistakes when you can learn through others? Like myself, I've bag held a lot of, leveraged ETFs in my day. And the truth is, guys, if you're not ready to get in and out of one of these, if you're not ready to day trade them, just don't even touch them. And if you're a beginner just getting into the markets, just don't even touch leveraged ETFs. Please, just don't touch them. But if you have more experience, you can trade volatile leveraged ETFs like SQQQ, for example, which can go up 10-15% in any given day. And this goes up whenever the NASDAQ is going down, right? So you can play this if the markets drop. Another one, is SPXS. This goes up whenever the S&P is going down. So these are options here, but again, they're very volatile. You can get caught in them, and quite honestly, if I were to get caught in one, and let's say it goes down 5% very quickly, I'm dropping out. I'm selling out, right? I'm not looking to hold them because that leads to bag holding, and that leads to 40-50% losses, which many of you guys just don't even mess with them. Just learn from my mistake. I'm telling you guys, you're going to lose a lot of money if you hold these. But if you're disciplined, if you can day trade them, go ahead. go ahead, trade them. There's a lot of money to be made, and I don't want to sound too preachy, but I'm just giving you guys a fair warning from somebody that's lost a lot of money by trading those leveraged ETF products. So overall, guys, those are the bulk of the stocks I'm watching heading into this week. We can talk airlines a bit. Airlines, I'm also watching these. If the markets do bounce back, they'll probably bounce back pretty aggressively. So AAL, DAL, LUV, SAVE, SAVE is Spirit Airlines. That's an interesting play here. It was up 17% on Friday. CCL's a cruise line, up 15% on Friday. RCL's another cruise line. Wynn Resorts is a casino, high-class casino business, hotels, this, that, the third. They were up 3%, and you can tell they've dropped about 20 points over the past couple of, days, so about 16% profit potential there. So these are the stocks that I'm watching heading into this week, and as always, we can go over so many more, but the video would just be too long. So subscribe to the channel if you want to see more stocks talked about, more content like this, because I upload videos every single day here on the channel. And if you guys happen to enjoy this video, and I'm sure if you stuck this long, you did enjoy it, hit that like button. Let's try to get 300 likes on this video. And don't forget to join the Strive Smart Discord chat and the Strive Smart Facebook group, link down below in the description box. And again, you can get 2 free stocks if you want free money, valued up to $1,400 with Webull. All you have to do is deposit $100 into the account, and you get your free money. You get your 2 free stocks valued up to $1,400. So I'll catch you all in the next video. Thanks again for watching. As always, let's crush it this week. Stay safe out there, guys. Peace out.